Welcome to today's video. So in today's video, we're going to be discussing the concept of the breaker block. Yes, if you've been following this series, you understand fully that the last video we uploaded was on valid order blocks. And before the valid order blocks, we talked about point of interest, then emphasize order blocks. Now, this is point of interest 3. I'm going to focus more on the breaker block so I can understand the principle on how you can trade with this to make money. Before we get started, you ought to know that this tutorial is brought to you by PipPsychX, and our WhatsApp number is +234 8055369615, and I, Investor Tio, will be your host for today. Now, this is the breaker block concept we're going to be talking about, and I have two examples to show you when the breaker block can identify with a sell, because this is a sell example, and a buy position, and then move this up. Yes, before I proceed, this video is on our YouTube community, so definitely do it to subscribe to our YouTube community, like our video, and share with others so they can learn how to trade too. So this is the breaker block example, and I'm going to make it very simple so you can understand. So breaker block. Now, when a breaker block occurs, you should understand for that is literally an order block that are flipped through. Remember when people talk about support and resistance, S and R, right? So that's literally concept of order block and breaker block. The breaker block is literally your order block that is broken and then it flips. All right. So a broken order block that has flipped to zero. That's literally what breaker block does. If you watch our video on order block, you understand fully that with order block, this candle will not be here. Okay, you're expecting markets to walk this way to the order block and then boom, goes up. But what happens if the order block gets broken? Nobody talked about that, right? If the order block gets broken, what happens? When the order block gets broken successfully, we'll be expecting a retest of the order block and then keeps on going down. So yes, now when it's broken, you don't call this block again another block. We call this a breaker block. It's that simple. Your support turns resistance, your resistance turns support. When it comes to SMC, your other block turns breaker block, and just like that. I hope you get what I'm saying easily. It's as simple as that. No two ways around it. It's literally the point of interest for an opposite trade. I've explained the order block over here and how it failed to hold. And since it failed to hold, automatically when it's broken and people that want to re-enter it can enter it as an opportunity for them to get in with a breaker block. So this is going to become a breaker block, no longer another block. You get, so this block over here, this rectangle box, no longer another block, is now a breaker block. It's as simple as that. Yeah, the market was expected to get to this position. Let me do my part 2, like lower highs, lower low, retest, go back to the other block and keep on dropping. Right? This is what we expect the market to do. But what did the market do? Market was like, no, I'm not working the other block. I'll go all the way up, then come back to retest it and then continue moving. So if this occurs, just know that a breaker block has been formed. Now, this is everything to know about a breaker block. What else do you need to know? All right, you need to know that before a valid breaker block is spotted, all right, before you can see another block, you understand fully well that there should be a break of structure, break of structure, break of structure. So what do you mean by a break of structure? I will explain shortly. Now, clearly, let me explain better with this. For a sell position, okay, the market works with lower highs and lower lows, lower highs and lower lows, lower highs and lower lows, right? We know this for a sell position. Now, when a sell position is occurring, all right, for a valid break order block, you wait for the market to break this low, previous low in the market. This previous low in the market, you wait for the market to break this low. And once it happens, you call this a break of structure, right? You wait for the market again to break this low, this other low, and when it happens, you call it a what? A break of structure. That's simple as that. So basically, if the market keep on breaking lower lows and keep on moving to the downside, a downtrend is formed. But yes, how can we enter with another block in this example? From our previous example, we explained that once a break occurs, from the previous leg, we were expecting, okay, the market has moved all the way down, that impulsive move. Where can the market go back to that will be expecting to short the market from again? So this is where our point of interest will be. Now, the concept of breaker block is not difficult. Once the market does something like this, we will now be expecting the market to, okay, come back to this other block. It didn't hold true. It broke it. So definitely we'll be expecting the market to pull back to this zone because there are still orders here. Other block, remember, is a block that holds orders. Now, this becomes a breaker block. I'm expecting the market to push all the way up. This is the concept of breaker block. You can clearly see it. All right. It's very, very simple. Very, very simple. All right. A breaker block can be utilized here. And if you have a really good risk to reward ratio, you can work with it. But if you are someone that just want to be conservative, you can put your SL here and you're still beneath the, okay, the leg that led to the push up, and your TP 1/2 or 1/3, you're okay with that kind of conservative trade or targeting next liquidity. All right, just collecting liquidity as you keep on going. Okay, but if you're someone that's like you're worthy to take risk, your LCA can literally be beneath this. All right, your LCA can literally be beneath the breaker block, and then you have your tight fixed reward ratio for maximum gains. But yes, the reason why this is more risky compared to the other ones, because the market can literally still pull all the way down without respecting the breaker block. But yes, nothing is 100% in forex trading or in trading in general. So basically, find your risk appetite and know how to work with it to maximize your RR. All right. So that has been said for that example. First things first, there must be a break of structure. There's initial break of structure for a breaker block, and after a break of structure, there must be a break of the other block. So this is the break of structure over here. Break of structure, the downside is it for this valid example, and then a break of this other block. This other block, you can see it broke the other block over here. So when something like this happens, we start expecting markets to retest this block again, hence making it a breaker block. All right, just understand these two key concepts. A demand flips through to become a supply, and a supply flips through to become a demand. If you can understand these two concepts, you literally understand other blocks and breaker block. There's nothing difficult about other blocks and breaker block. It's as simple as that. All right. So basically, you can actually go to the charts right now and look for a breaker block. Let me see if I can see any breaker block on the charts. Let me see if I can see any breaker block on the chart, because the market usually flips through, and once it flips through, another block comes to a breaker block and so on. So let me see. Some of you must have spotted one already, but let me confirm if I can spot any. All right, if I can spot any. Okay, so don't spend time sleeping in the market looking for breaker blocks, because they will usually occur when a change of character occurs. But yeah, let me show you an example over here. It might not be the clear example you want, but it's going to be a good example. I'm going to be using this is uptrend. Let me show you. This uptrend over here. Higher highs, higher lows, higher highs, higher lows. All right. So we're expecting the market to come back here and continue moving up, right? And come back here and continue moving up, just like that, right? But the market did not continue moving up. At the time, it started going down. So what happened? You want to investigate. So look for where there is an impulsive move to the downside. Impulsive move to the downside here. You can see an impulsive move to the downside over here. This is this impulsive candle. Now, for this impulsive downside candle to happen, it means there were other blocks before this. So where is the other block? You understand, from a basic example of other block, like I can mark it directly at the extreme position, okay, before you check out your trades and the likes. If you want to do that, you can actually do that, and to actually be helpful here for you to trade. But, right, but here's a disclaimer over here. If you are marking out your other block like that, you may not really get your breaker block from this example. So let me work with this so I can just understand the concept of a breaker block. So yes, I can see several others over here. So I can say, oh, this is my other block. So you just draw your other block out. Okay, draw it out. So after breaking the market all the way up, and clearly see this is where we're expecting the buy to hold through. The market came back over here after breaking it all the way up, then broke it again to the downside, came back to use it as a retest and started moving down. Alright, started moving down. So you can see a clear breaker block in action here. This is not really a simple or a very simple example for you to work with, but it's giving the idea. Alright, this other block was meant to move up from here. The market's okay, at least it came down to, then broke up and the likes. You get the point, before coming all the way down over here. The market held true to this extent because it was not mitigated at this point for the breaker block over here until it got to this extent. You understand better what I mean with more examples. Let me see if I can get another example that I can just explain. I want to try to do this live so I don't leave you guys hanging. Okay, so this is a clear example too. So this is our other block over here. All right, I'm using this example as an other block. Okay, so I can just get the concept. Now the market was meant to come here. Okay, higher highs, higher lows, higher highs, higher lows, higher highs, higher low. Market was meant to push up from, okay, this is market breaking up. We're expecting the market to come here and push up. All right, we expect the market to come to the other block and push all the way up too, right? Market did not do that. The market broke the other block, and when it broke it, it retested the other block and then started moving down. All right, started moving down. So this is a clear example of the other block becoming a breaker block. I hope you get. So it's really, really simple. You just go to the charts, check for breaker block, check for other blocks, learn more, all right, understand how you can find them. Just focus. When you get the chart, focus. Find your strategy and know what works for you. All right. But there's an assignment I've given to you directly. Okay. Go to the charts and look for breaker blocks. See if there are things you want to trade with and know how to maximize them. As for me, I focus on other blocks, but I want you to check out breaker block if it's something that you love to work with. Okay, because everybody has their view of the market. But as for me, other blocks is what I want to work with. Just want to give you this tip so that you know you have the freedom to choose what you want to work with. Mix it up with your strategy, know your probability ratio, and how you can maximize gains with it. From my end, thank you very much for staying with me to this extent. Go to subscribe if you haven't, and if you gained enough for this video, turn on notification bell because it has not ended. The series continues. All right, next set of video will be explaining more about these concepts. Okay, like this video and share it with others so they can learn too. Don't forget to join our Telegram community where we drop free signals. They're literally free signals, like literally free signals. Check the description below. You see the link. Go to our Telegram community and join the community. All right. If you wish to get a broker, a prop firm, use the link below and sign up on MAVEN. Cheers to great profits. See you next one, champs. Peace.